All right, let's go. So, good morning, everybody. To infinity and beyond. Boom, Mike. All right, g'day, mate. Hey, good morning, Forex traders. Let me remind you that trading Forex is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. So please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. See, you can lose money. Be careful. Hello. Oh, yeah. My name's Wayne McDonald. I'm the Chief FX Market Strategist for TradersWay.com. Please swing on by to TradersWay.com. Open up a demo account. It takes, 30 seconds? Seriously, you can be up and running with an MT4 account within a minute. Swing on by, test us out. We're fast, we're quick, we're affordable. But here's the thing. We want you to succeed, and that's why I'm doing these educational events every single day. We want you to succeed. We want you to develop skills. We want you to develop confidence, and then fund your account with real money. And with that success, we'd like to be your long-term trading partner for your successful Forex trading business. That's pretty cool, right? So anyways, we do these sessions to help you gain that success every single morning, 7:30 in the morning here at Forex.Today, Monday through Thursday. And then on Fridays, I do it at fxstreet.com. See you over there. Swing on by to the website. We have all original content. We have a team of analysts stationed around the world. We have a new analyst that focuses exclusively on gold. You like the gold or we got to the gold? So he does 2 posts a day. One is a gold outlook for the day, and then halfway through the day he does a gold update. Isn't that nice? Cool. So swing on by, just register and leave a comment, leave a like, share, do all those things you can to pay it back. And we love you attending these webinars. So let's play the happy music and then let's get into the charts, huh? It's been some great trading. You ready for the happy music? Let's do it. Kick boosted. Doom, 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 doom. I'm so happy. There it is. That's Forex.Today. Read more. Forex.Today. That always puts me in a good mood. And my screen is frozen. Come on, not already. There it is. Wow. All right, so lots of things going on today. I think we should. Let me get rid of that. All right. Let us start with. I guess we'll do a. You know what? I wanted to take that though. Oh well, maybe later. Let's go to scan. Yeah, pip party. Mercy is up 500. I think I'm up 600 from yesterday and so far today. So, seems like one of the pieces of software used to record all the different things I'm recording is slowing things down. So I updated that Adobe Air thing it asked me to update, and that hasn't helped. It's too bad. I don't know what it is. Just out of the blue, start slowing things down. Haven't had a slow computer all day. So what is doing it? I'm not even running my drawing tool. Yeah, is it Microsoft? I don't even know what it is. It's one of the recording things. Hang on, maybe I can restart MT4. But it's freezing something up. Oh, I hate that. Come on. Delete the misconfig file, run from the Windows. I don't want to. So I guess, well, we wait for this. One thing that I wanted to talk about was oil. Oil has fallen quite a bit. Russian ruble has fallen. And the dollar index hasn't moved at all. Japanese yen has gained a lot of strength, but the dollar index hasn't moved. Why? All right, this is, hang on. Let me do a Control-Alt-Delete. This is frozen. Well, while you answer that, hang on. Let me try this. You know what? I got another error again. It's Adobe. It's the thing I just had to update. Nice. Good update, guys. Good update. Let's update the software so that it freezes when you use it. Yeah. All right. Hang on. I think you should be fine now. Can you see the charts? I think you can, right? No? Okay. Hang on. We're almost there. Success is near. We're almost there. Share desktop. Yeah, it's the stupid Adobe. All right. I thank you for your patience. Hey, patience is needed in trading. I'm telling you. Have you ever found that? My device has lots of virus. No, there's no virus, dude. All right, there we go. Yeah, patience is really required in trading. I'm always amazed how you're instantly punished, or at least me. Right? At least I'm instantly punished when I jump into a trade. I don't know, when I throw down a trade. I don't think it ever works. Right? I don't think I've ever made an impatient trade that ended up working out. Usually I can catch like the price action of it and not lose money, but making money is much more difficult when you're jumping in. So anyways. Okay, loading. I wanted to do oil. There we are. Okay, now oil, look at that, clearly below 30. Got down to 85 or 28.85. Now, what do you think of this trade plan here? All right. This would have been something we did yesterday-ish, right? Or not? Let's see. Yesterday's high. Yeah, so we did it the day before yesterday. Yep. Isn't that neat? Again, just a particular price action play. See how if you're chasing price around, you could get whipsawed, but if you were doing one trade per day, and that's something that I talked about yesterday, right? Using 4-hour charts, identifying trend, try to find a way to trade out in the direction of that trend. Good coffee. And so that's what it looks like after the fact. This was before the fact. This is after the fact. And of course, you can see, connect the old support, drag it across. See, I couldn't have done it back then because this didn't exist yet. It was too far to the right. But you drag it across, what used to be support becomes resistance, and you sell that. What about the oscillator? How do you feel about the oscillator on that one? Seems right, doesn't it? Yeah. And so those are the things we're looking for. Not only is the oscillator overbought and you're a bear, so overbought oscillators in a bearish market is an opportunity. It's at a role reversal, which is resistance, right? And it's the beginning of the London session, isn't it? So, I don't know, good things. But anyways, down, 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 down. And that's bad for CAD. And it's bad for other commodity currencies. So I was short Kiwi for a while. I'm short Aussie. I'm short CAD. That kind of thing. I got knocked out of that pound dollar trade that I had yesterday. I hit 250 pips, and I got knocked out for profit. I forgot I had I don't even know why I had a 250. It's a really strange thing for me. I'm more of a 300 than a 250, so I don't know how that went down. But anyways, I hit my limit, so I'm not in that trade. And look at this, I'm frozen up again. Stupid Adobe. Yeah, it's totally Adobe. Well, if this continues, then we'll just move over to YouTube. All right, you should be there again. Okay, this is going to be the last attempt. If it freezes up again, then it's just the stupid Adobe error slowing down and crashing everything. Then we'll just move over to YouTube. All right, so nonetheless, interesting move down. That should affect commodities, right? Let's look at a big spike that occurred yesterday. This isn't something that I watch. Like, I'm not really an Aussie Kiwi trader. Yeah, I'm already frozen up. All right, we got to go to YouTube. Hang on, let me get you a link. The software might let us down, but I'm not going to let you down. Hang on, let me get the link. Okay, please move over here. And we'll just continue. Feel free to share it with your friends. So, yeah, so yesterday there was this giant spike straight up, and then it's come down. Maybe this was an opportunity, who knows, back at the hourly 21. But nice spike, huh? Now you can see we had the trade plan going, which shows we had it range bound. Do you remember this trade plan, guys? I backed it out. We had, maybe I'd do it on a 4-hour. That doesn't look clear. Okay, go back to the hour. We had this sideways and sideways range bound, right? And we discussed the way to trade a breakout. First of all, when it's moving sideways, you should probably just ignore it, was one of the messages. Then I said, well, why don't you just wait for it to break out to the upside, catch the retracement off the roll reversal, and then long it. Right? And look what actually ended up happening. Isn't that pretty? Okay? Yeah, and again, we're talking, days before it happened, we had a trade plan for it. Not minutes, but days. Okay. Great. I guess I started my drawing tool. Apparently, I can't use my drawing tool today. Get out of here, huh? Okay, let's see. Stop. I guess this Adobe's killing everything. Okay, you should be able to see again. Okay, I'd like to try one more time, so hang on. Like to have a drawing tool. It's not too complicated, is it? There we go. All right, so again, pieces that go together on this. We had it trapped here. We had it trapped here. We were kind of in the middle, if you recall, guys. And the plan was let it break, let it pull back, let it go. Let me change colors because that's hard to see. What do you want? Blue? Okay. Let it break, catch the pullback, and gone. Well, what actually happened? It's not perfect, right? We did break, right? So we did get up here, but we came all the way back here and then took off. Yeah, that happens too. Same thing. I don't remember why I put this little orange line there, but actually that ended up being pretty good. So anyways, that caught my eye. And then did you see that big move yesterday? It just went pa-chow. Guys, if you're still in the other room, there's a link, and you need to be over here, guys. I'm talking guys in the other room, trying to get them over to YouTube. Okay, now. So that was a very interesting Aussie move, and then it pulled back. So if you were interested in buying it, you're kind of in that zone. Let's take a look at USD yen. That's an interesting bellwether for the overall market. Japanese yen got strong. Okay. And it makes me think, and let's go over here. Makes me think, what is the Nikkei doing? Let's take a look at the Nikkei. And, well, gapped for us for some reason. Well, I think you can see this is an hourly chart. Okay. So here's the open of Asia, and here's where we are now. What do you think, guys? All right, this should be red, so on and so forth. So we had a big down day. By the way, look we just hit the weekly target for bearishness on the Nikkei. Let me back out a little bit. Okay. Down to the bottom for the Nikkei. What happens to the Japanese yen when the Nikkei falls? Okay, go to the hourly chart now. Oh wait, that's Aussie, sorry. Well, there's my Aussie yen trade, I guess. What do you think of the Aussie yen trade? Lower low, lower high, sold it, gone. Okay. Yeah, so long story short, what I was trying to get to is the, I don't know why that was Aussie. What am I trying to do here? Aussie yen. Oh, I clicked the wrong one. Pivots yen. I wanted USD yen, sorry. There it is. Yeah, the Japanese yen tends to get strong. Okay. So do you watch the Nikkei in the morning? I gave someone that advice last night. I said, well, before you short the Japanese yen, why don't you look at the Nikkei? Because if the Nikkei drops, the yen will be strong, not weak. Right? And sure enough, Japanese yen came down, right? Yeah, only from 117.80 or 75, down to 16, look, it actually hit 1590. Yeah, only 100 pips. Well, that's a lot, man, for Japanese yen. I guess it was here, right? I guess it was here where it fell, but whatever, it's a lot. So that's one thing to keep in mind. Now I'm going to take this and drag it across, and then let's go to 4 hour, and let's back out and just remind ourselves of where we are in the world. Maybe, okay? You see that thing I drew? Ooh, that little box I drew? I'm too far away now. Oh. All right, what I'm trying to get to is we're on this little orange line. There's the bottom we printed today, and August 20th, 2015, we were here. Oh, snap. That just happened. Eric says, what happened yesterday? I was waiting, but no one was on because of holiday. Are you talking about Monday? It's Wednesday today, dude. Maybe your clock's off. But yes, markets were closed in the United States of America. On Monday, yes. But you should know that, right? When markets are closed, you should know that. Yep. I mean, you should, right? Yep. Yeah. Don't get surprised on these things, guys. Right? You should know when the largest market in the world is closed and that trading volume is going to be 70% less than normal. You should know that. All right. So let's talk about that. It's an interesting conversation here. But Forex was open. Well, who cares? I just told you 70% of the market's not around. Bond markets are only doing half a day. All equity traders are gone. Banks are closed. Think of it. Banks are closed. Oh, well, the banks in Cyprus are open. Pfft. All right, great. You're going to compare Cyprus to the United States. All right, then trade it. But to me, when I see the largest market in the world and banks are closed and the serious bond traders are not around, equities are closed, the big money is not in the market, I don't want to be there. You trade a self-fulfilling prophecy. Right? You're a technical analyst, basically, right? So you trade a self-fulfilling prophecy. If someone doesn't put the money in the market won't move, no matter how much of your account you put in, right? If you put 100% of your account in the market, you're still not going to move the market. So someone needs to move the market for you, right? So what if that person or persons are not trading because it's a holiday? and they're spending time with their children. You throw down money and you're like, wow, the markets are weird today. It's just not moving the way I'm used to. Uh-huh. So that's a risk, isn't it? Right? Do you really want to lose a lot of money in the market when the big players are out golfing? It's like, oh man, Monday was awesome. I went golfing. I had a few drinks with my buddies. And then what did you do? Oh, well, I traded the market anyways and lost some money. Oh, well, right? So yeah, so just you have to realize that we're vulnerable when market participants are not around because we trade a self-fulfilling prophecy. If you think the pivot point's going to hold, it's only going to hold because someone else 1,000 times bigger than you is going to hold it on your behalf. They're going to place money into the market. Okay? So just be careful. So if it's a holiday in the United States of America, I'd caution you to be, about your trading. Just be careful. Okay? So anyways, we got to watch these areas. Maybe we'll have an opportunity to sell again. Where's the 4-hour 21? Where's it going to be in the next few hours? Should we sell at 117? Right? That's sort of the thing I'm thinking of because as we talked about yesterday, I'm watching this 21 EMA, but I'm not paying attention to where it is now. Who cares? I'm paying attention to where it will be in the future, and we know it'll likely move, well, it will move down when we get a new 4-hour candle. And where will they converge? Well, how about 117? So now I'll zoom in a little bit. And maybe we'll have a like this today, or today and tomorrow. This is USDN. Okay. Okay. But it doesn't really matter what currency pair it is. I mean, we'll go through, but I'm not really trying to put you into a trade to say this is what I want you to do. That's not what I want you to learn. So this could be any currency pair on the planet. It doesn't really matter. I'm trying to get you, focused on price action and identifying risks and identifying support and resistance and developing a bias and seeing trends and trading in the direction of trends and all that. That's what I'm trying to teach you so that you can open up any chart and decide whether you want to take the shot or not. Whether I think USD yen is a buy or a sell right now, to me is pointless. Right? That has nothing to do with your successful Forex trading business in the future, right? I want you to be a successful independent trader that can that relies on nobody but your own analysis, right? So let's take a look at Pig Dog. I was actually pretty upset I was knocked out of this, but it came back. It always comes back. And for the life of me, I must have had an EA that threw down a 250 pip limit order, and that's a really strange limit order. I don't know. I must have maybe moved it because maybe there was a pivot point or something. I don't know, but I was pretty shocked to see the trade gone. But this is where I got knocked out yesterday, I think about here on the way down, and I left all that on the table, but I don't think I would have gotten out anyways. But the question is why, right? Why? I'm not sure. But so here's the price action, right? Down, lower high, sell, right? Down, lower high, sell, down, lower high, sell. Okay. So I have to get back into this now, and that's the hard work. That's why I keep trying to tell you guys to let your winners run. I had no intention of getting out of this at all. It's just very often I use EAs that automatically throw down a stop loss and a limit order because I just don't like trading without stops. I mean, I just don't. It's just a habit. I've been burned too many times in the past, so it's just an automatic thing for me. And usually what it does is it'll put down, let's say I entered there, it'll throw down a stop here. Let's say it's 50 pips, 100 pips, 150 pips, it doesn't matter. And then it'll just throw down, and I usually have one at 300. Just because I don't want it to be taken out, but I got to have something there. And then later I can adjust these things, right? I can move this closer, I can move this farther away, all that kind of thing. And so I don't know why it was 250. I didn't want to get taken out because you look at this trade. Like, you know, some people work really hard. How many hours a day do you work to make 60 pips? And you feel really good about your 60 pips, right? Takes you, what, 5 or 6 hours of setting things up and waiting for trades and enter a trade, then take out, you know, you get 35 on that one, then the next one loses 12, and then the next one, right? You can work hard all day for 60 pips, right? But if you're in a trade, in a trend, you can wake up in the morning and have 100 pips and haven't even spent 1 minute in front of the chart. You know what I mean? Absolutely. So that's why I would rather set things up and catch the direction of the trend. So if you remember, we worked really, really hard to set you up for this short at 160. It was 160, right? We did this last year, last summer. The target was 132 or something. I'll put 135, right? Right? So 3,500 pip call. 3,500 pips. Well, we're on our way, right? We're now at 141. So we're 1,900 pips into the 3,500 pip move. And at some point you have to laugh. You're like, well, then why the hell am I working so hard to make 50 pips a day? Right? You know, I covered that 1,000 times. I've covered this trade plan. Right? And it's just moving along, moving along, moving along. I was worried about a double bottom, absolutely. And I'm worried about, you know, better than expected inflation data. But we know we need the data first. Right? So on and so forth. Well, we haven't had the data yet. Lots of news coming up in 20 minutes, guys. So we haven't had those things yet. So, you know, remember, one thing I've taught you is the trend will continue absolutely forever until it reverses. But let it reverse, right? We need proof. So here we are. There's the 1382, and we're on our way to 136. Okay? So when following a trend, when do I enter and exit? Well, you know, every one of these is an opportunity. So I enter the trade, and of course, you know, I've given you 100 trade plans on this. But let's go to some of these, okay? Can you see? This is back in like November. You can see we have this trade plan. It's down to support, pullback, which is a nice little role reversal area, right? So now we're measuring the top, the bottom, 618 Fibonacci retracement, and then it arrowed down to make it very clear for everyone, right? And the big macro target is 136. So even here we're shorting at 152, 153, right? Made a new lower low. So now you measure from that high there, and you look at your sell zone, and then you can see I have it marked here. I went a little higher. Oh well, cry me a river, right? Down. Do it again. Take this low, drag it across. New sell zone, okay? And then, oops, and then it's really taken off, right? Because we got through the old support. So whatever. These are all trade setups. Sell off the 5 EMA. Look, every day it touched the 5 EMA. Every day. You could have made the entire average daily range, right? Or to the effect of it, right? So, I could see, you could have 10 positions on this. You could have 5 positions on this, But like, look how clear we had it set up in here. The reason I had to draw this is we were nervous nillies in here because it moved sideways for 4 or 5 months. So I had to keep reaffirming. The big moment of truth was finally the breakout, right? When we got, because we had a bottom here, right? Bottom here, and then this area here, where the arrow is, that's the big moment of truth. Breakout, right? Because now we're lower than the previous low. Okay? Pachow. It's nothing but lower lows and lower highs. And then massive sell-off, right? Okay? But one thing I try to teach, when I'm teaching people to be, professional traders, and they have their technical analysis together. They're decent technical traders, but when I teach portfolio management and stuff, it's a whole different kit and caboodle. And to teach professional traders that, to be ready and to understand that it's normal to have a 4 or 5 month period of nothing. Right? What amateur traders end up doing is losing 50% of their account during that 5 months, and then spend the next 5 months that are actually fantastic trading. They're spending that time getting back to break even, and it's a terrible cycle, right? Because if you lose 50% of your account, then you have to make 100% return to get back to zero. And then you've wasted all the good months getting back to zero and probably taking too much risk, because to double your account in 5 or 6 months is trading suicide to attempt it, especially if you're not very skilled to begin with, right? So it's a formula for disaster. So it's a portfolio trader, you're entering a trade, move your stop to break even. Right? Entering a trade, moving your stop to break even. Entering a trade, right? Move your stop to break even. Right? Entering a trade. Oops, got the wrong one. Right? Entering a trade, move your stop to break even. And if all goes well in the world, and not always, you end up getting like 1, 2, 3, 4, and of course you can continue this, 5, 6, so on and so forth. And eventually you move all your stops. So you got 6 stops here, and it's fallen 1,000 pips, and you have 6 trades open. That's what I'm trying to get you at. But sometimes you got to sit and really it feels like nothing's happened. And it's not an easy thing to do. And then you can get your strategies a little more complicated while in the middle of this you're maybe hedging by longing the pound dollar to offset the losses that you're incurring, or not losses, but drawdowns into your profit that you're having in the other one. So you're proactively hedging. So you're long-term short but short-term long, and you can complicate it all you want. The easiest thing is to place a trade and walk away. Now, Euro, there's a question here about Euro. Euro was such a crowded trade that it's muddy now. The fundamentals are clear, but too many people were in the trade, and it's muddied the waters. Too many people were front-running the Fed hike, and then they wanted more hikes, and then all of a sudden they're freaking out because, oh, China, oh, this, oh, that. The market's incredibly emotional and incredibly irrational. So there was too many people short the Euro USD because it was the obvious trade, but they got in late, obviously, right? So now here we are. This is supposed to head down, but it's not doing anything, right? So I'm just kind of staying away from it, and we're in here. I haven't traded the Euro USD in a while. And why not? Well, okay, let's zoom in. What did I teach you yesterday? I know it was yesterday. What did we cover yesterday? Will it go down to parity? Who cares? What we discussed yesterday was using a 4-hour chart and using it only to discern the direction of the market trend and the speed in which it's moving in the direction of the trend. To say, hey, this looks bearish. I think maybe on a smaller time frame I want to set up a short trade at resistance, right? Right? That's all it is, right? Look at the 4-hour chart and say, oh, it's bearish. Well, if I can catch it on a 15-minute or a 1-hour chart where it's overbought at resistance, then maybe I'll sell in the direction of the bearish market. I mean, right? We're just lining up time frames. Not super complicated, but again, trading shouldn't be super complicated, right? So I look at this chart. And what does it say? It says nothing. It's not going up. It's not going down. So excuse me for not trading it, right? But that's me just carrying out the lessons, right? And why would I trade Euro when Kiwi has been another ridiculous currency pair? Yeah, why would I do Euro dollar when I'm doing pound dollar? Right? I'm complaining because I got knocked out for 250 pips and it was too early. Oh, I could have got 300 pips. And then I look at Euro USD and it did nothing. See, that's the issue, right? So look at Kiwi. What did Euro USD do yesterday? Basically nothing. What did Kiwi do? Right? Isn't that nice? Oh, and I asked you earlier today, how could you get like amazing moves in a lot of currencies and yet the dollar index is flat? And that has to do with emerging markets. You know, so safe haven flows in emerging markets. Can you think of one? You're in Indonesia and you're watching the Chinese stock market fall. What do you do? No, guys, those currencies are falling and they're not in the dollar index. Yen, maybe yen, sure. Swiss franc, no. Gold, Singapore. Thank you, Joseph. So let's do like a I don't have any. All right, well, let's do this. British pound, Singapore dollar. What do you think? Was there an opportunity to make money on that one? When the Chinese stock market falls, what happens to the Singapore dollar? Okay. That's because investors are moving their money back to their bank accounts in Singapore. Okay. Okay. So let's zoom in. What did we talk about yesterday? Um, the 2155 cross in here. Oops. Okay. Somewhere in here. It might be becoming bearish. We don't really know. So you trap it. Huh? You trap it and wait for the breakout. So the breakout, pull back, sell it, breakout, take the old support, drag it across. It's now resistance. Right? And maybe something like this. What was the other thing we talked about? Sell it to 21. Sell it to 21. Sell it to 21. Didn't quite get that one. Close. Right? I guess this one here we got really close. There's the 21. And then maybe again sell it to 21. That's exactly what we talked about yesterday, right? And you say, well, Wayne, I don't trade pound Singapore dollar. Right? It doesn't matter. Money is leaving somewhere and it's going somewhere else. And when the money crosses a border, valuations change. This one in this pound in this case gets weak because it's leaving England or Great Britain, and the Singapore dollar gets strong because it's going to Singapore. That's the money flowing. Okay? And that's the trick. If you can figure out where the money's going, that's where you make, some of that money goes to your wealth, right? Your net worth increases if you figure that out. Right? Singapore has more private money than Switzerland. So if you're a oil sheik, you have money in Switzerland. If you're a billionaire Chinese investor, your money's in Singapore. That kind of thing. Okay. Now keep in mind the Nikkei has been coming down during the same period too, right? That's the way the cookie crumbles, yeah. If you want a piece of the cookie, go where there's lots of cookies. And bring milk. Okay, so that might be interesting. I'm thinking about this one, if you don't mind me talking out loud. I'm thinking about this one here. And when we get a new candle, this 21 is going to move down. And then another 4 hours later, it's going to move down again. And you might see something like, not now, but maybe tomorrow you'll look at this and you say, wow, Wayne sold right off the 21 EMA. Well, the problem is the 21 EMA is here. Tomorrow it's going to be here. And you'll say, man, I never seem to catch the 21 EMA. Why don't I ever sell it here? Well, it's a moving target. It's lagging too, right? So this is Kiwi yen. But again, it shouldn't matter to you. Yes, 90 seconds to the news. I'm using TradeTheNews.com.
The time we'll also get Canada wholesale trade sales for November expected 0.4%, manufacturing sales in Canada expected 0.5%. Canada data is ahead of the 10 o'clock Bank of Canada rate decision.
La-di-da-di-da-di-do.
The December CPI data, December housing starts and building permits, and the Canada data in just a few seconds.
I'm so excited. I just can't hide it. Which one do you want to do?
CPI minus is 0.1% month-over-month is 1/10 lower than expected. Core at 0.1% is also 1/10 lower than expected. Year-over-year at 0.7%, which is also 1/10 lower than expected. Core at 2.1% is in line with expectation. Real average weekly earnings at 1.6% is in line with the prior month. Building permits at 1.23 million, about in line with expectation. Housing starts at 1.15 million, a little lower than 1.2 million expected, with the prior revised slightly higher. Canada wholesale trade sales for November at 1.8% is better than the 0.4% expected. Manufacturing sales at 1.0% is 0.5 higher than expected, but back month revised lower.
Initial move on Dixie was negative. So, no inflation in the United States. I'm trying to, I missed the
Just taking a look within some of the data, single-family starts in
core,
December fell
is
to
it?
768
Year-over-year
from
core. Okay, there you go.
794,000. Its multiple-family
2.1.
starts fell less to 381 from
That's
285. Permits, single-family permits actually moved up to 740 from 727, while multiple-family permits moved notably lower.
Wholesale, much better expected for Canada month over month. And manufacturing sales good month over month as well for Canada.
Seeing other news outlets picking up on the earlier report from about 90 minutes ago, Venezuela reportedly requesting an extraordinary OPEC meeting to discuss oil prices. Originally reported about 90 minutes ago.
What? Venezuela doesn't have any money? I guess I should sell my my vacation home then, huh? Okay, so this is green light right now, Kiwi yen, which is fine by me because I want to sell it up high. Yeah. Well, oh, wait. Wait, that's Singapore dollar. I can easily get confused on that one. Oh, I don't want to do that either. Let's everyone press the wrong button. All right. What am I watching here? Kiwi yen, huh? Let me get back to the Kiwi yen. My life's complicated enough. Dig, if you will, the picture. You and I engaged in a trade. There we go. December housing starts. About expected. Building permits about expected. So it's just better news out of Canada. But I don't know. Do you think Canada's going to raise interest rates? Right? Now, there's a chance that they could cut. Okay? So, yeah, let's look at oil. Dig, if you will, the picture. Can you, my darling? Can you picture bliss? An ocean of violence in bloom. All right, come on. Load up. There it is. So I have WTI on the left. Let me expand this up. Yeah, so I'd sell it around 29.50. We're at 29 if you think the psych level is going to hold. And kick it off the hourly 21, which is the 4-hour 5, isn't it? See? So you go back to the hour here. All right, let's go to 15 actually. So at the end of this cycle, we have about an hour left. So why don't we do like a 3-wave correction through the cloud and then reverse it? What do you think? If they cut, CAD will be weak, question mark? Yes, that would be the expected outcome. But not necessarily. It can do whatever it wants. For example, let's say Canada cuts interest rates by 25 basis points. But the market was anticipating a cut of 50 basis points. then the opposite of the logic would happen. The market would be disappointed, right? So, more importantly, the bigger cut would be priced in, and then suddenly it'd be mispriced, and suddenly the Canadian dollar would get really strong because they only cut by 25 basis points. In a different situation, they cut by 25 basis points, and the Canadian dollar tanks. So it just depends on what the market was expecting, and more importantly, if the market expects something, they're going to trade it. And if they don't get what they expected, they're on the wrong side of the trade, they got to get out, and the opposite happens. Remember, it comes down to money. What are people doing with the money? What have they done with the money? What are they going to do with their money? The rest is all just academic nonsense.
A report out of China that some Chinese banks are delaying or preventing some foreign exchange transactions.
Yeah, well, all these kinds of things happen all the time. So that's where you have to take academic, logic and put it together in real world behavior. But like you can see, we've nailed some of these trades pretty hardcore. I mean, there's some pretty nice setups in here. Yeah, we got that already. That's why I said I should probably sell my vacation home, right? Joking, like I have a vacation home in Venezuela. Yeah, I guess I'll have to sell it and buy something in El Salvador. A nice house up in the hills.
Chinese banks delaying or blocking some forex transactions that's coming out of Australian press. Talking about tougher capital controls in China.
So anyways, that's cool. Another good trading day ahead of us, I believe. I hope you're starting to see that it's worthy of your time to look at the markets at a higher time frame and set up some logical plans and be ready in zones like this. In the future, I might want to sell because this was a sell zone, and this was a sell zone, so on and so forth, right? And you can see that the big money is waiting for those zones. And if we're making these types of pullbacks, like you see here, on an hourly chart, what do you see on a 15-minute chart? A 15-minute chart, you see stuff like this. And you say, aha, it's an uptrend. And then it goes like this. Boom, right? And then you're like, oh, it's a downtrend. And then what does it do? 3-wave correction up. And then you're like, it's an uptrend because it's higher than this high, and that's high, and then it goes more. And you're like, oh, but what you're forgetting to do is look at the higher time frame, and very often you're only looking at the smaller time frame. Well, in the higher time frame, all it's done is this. That's called fractal geometry. So I would suggest you start on the higher time frames first and answer the billion-dollar question: are you a bull or a bear? Yeah. Yep. In fact, on YouTube, what's it called? It's like how to trade Forex using, let me get something for you. Will you wait a second, please? Okay. well, let's just go to YouTube. I have over 2,000 videos on YouTube because I'm a nice guy. How about how to trade Forex using Fibonacci? I think I got something up there for Fibonacci. If not, maybe I'll do one for you. No. Yeah, maybe not. I thought I did. I thought I did. Oh, you know what? Maybe it's leading and lagging indicators. Leading, lagging indicators. Yeah, I thought I did. I got them somewhere. I don't know. Yeah, I have this huge to-do list that I'm working on. So I'll put something on Forex.Today sometime. Oh, wait. This one's about me. It's just not my video. This is me speaking. 7 years ago.
Develop trade plans that attempt to align price and market action. That's what I want you to walk away with. All right, I'm going to use moving averages
How
to
cool is
differentiate
that, huh?
between price and market. I'm going to use oscillators to differentiate price and market. We're also going to use Fibonacci.
I sound like I'm
and we're
5
also going to
years
use
old.
Pivot points. Fibonacci being sort of support and resistance, a leading indicator for price action, and pivot points, a leading indicator for market action. So I keep separating the two. But what you want to walk away with is
How do
the
I enter
idea
into the chat?
is to align
Oh, here we
both
go.
price and market for your best odds of success. Okay. Okay. Lagging indicators. Lagging indicators study
Say
past
something,
data.
Forex. All right, here.
All right. They
here
do
we
not
go.
predict the future. They've only told you.
Yeah, that's
what
my voice
has
from a
been
long time
happening.
ago.
Okay. What you're looking for is a change. All right. You're setting up a trade plan, so you
So
want
anyways,
to sort of,
I don't know. I'll do something for you. You're my sweet baby and I care about you. So I'll try to get something up on Forex.Today soon. Yeah, the bourbon. Yeah, 25 pounds will do it too, huh? Well, anyways. Peace on earth. May the bips be with you. May your profits be above average.
Treasury Secretary
See you
Luna
tomorrow.
in Puerto Rico, again urging Congress to pass legislation to help Puerto Rico